let's start with oil here. It seems as though there is now some question as to whether Russia and OPEC are going to indeed extend their production cuts. What do you think is what scenario do you think is priced in right now?
Yeah, it's a funny thing what happens when prices rise, right, Julie? But yeah, for the most part, I think the market still has priced in that OPEC is going to extend freezes through the end of 2018. That's really just what everybody's been leaning towards. And while there might be some questions, there's always going to be some questions about that because OPEC is just a very volatile by nature. But that's what the market, I think, has priced in here at this point, especially with the higher prices that we've seen. However, crude has really been on the defense lately in sort of a risk-off commodity climate at the moment. Rising U.S. production as crude flirted with the $60 level is really keeping a lid on things at the moment. We're approaching the 10 million barrel a day mark. We're currently at 9.645 million. So that 10 million barrel a day mark would really keep a cap on things. EIA yesterday showed a modest weekly increase in crude stocks. The trade was expecting for a modest draw, although the draw wasn't as much, or the increase wasn't quite as much as API. The specs are at record longs right now in crude and the products. That is a bit of a concern because a short covering, or I'm sorry, a short or long liquidation break could be fairly deep. However, exports do seem to be on the rise. Earlier in the week, we were talking about China processing to increase. So, you know, December crude needs to hold the trend line and 20-day moving average here at 54.80. If we fail, we're looking at 52.50 to 50.60. But I'm currently looking for crude to hold this trend line and bounce a little bit back to, say, the 56.40 level. We could head to the 58 level, but I'd be a seller in that neighborhood.